Hi everyone, this is Robert Eldridge again with annuitycampus.com. Today I want to talk about IRA rollovers. I get a lot of questions on how to roll it over. Here's the deal. If it's a traditional IRA or a Roth IRA, you're going to move and roll that money over into an IRA or a Roth IRA. So if you have an IRA, you need to know what kind it is. And then when you talk to your insurance agent or financial planner, when you decide on where you want to roll it over, everybody will be on the same page because it has to match up, it has to be like to like, it has to be titled the same, and it has to be either IRA or Roth IRA. Now if it's coming from a 401k, then it's going to be 401k to an IRA, a traditional IRA. So just to make sure you understand that, and you'll save yourself a lot of hassle. Why would you want to roll it over? Well, let's say it's in a mutual fund IRA account, or you have other assets. You can even roll some CDs, certificate of deposits, are held in the form of an IRA as well. And now you want to go to an annuity. Annuities were designed with retirement in mind. That's their whole purpose in life. And if you think about it, 401ks and IRAs were designed and with the same principle in mind. However, with IRAs and 401ks, whoever was in the government that designed these products was pure genius. Because as the money grows in an IRA or a 401k, it's tax deferred. But what happens when you start taking the money for payments? You're going to get taxed. And they knew this going into it. So, depending on your political affiliation, I'm not going to go into that, obviously. But if you think the tax rates are going up, you're probably right. That's what I think anyway. So, when you started building this 20, 30 years ago, or 10 years or whatever, the tax rates might have been a little bit lower. It just depends on when you watch this video and what you think. However, now you got this money, and what do you want to do with it? Well, if it's in a mutual fund, it's going to have risk. It's going to have subject to fees, market fluctuations. Where do you roll that money over? Roll it over to an annuity, guys. The reason why you want to do that is because they have guarantees on them, and they were designed just with retirement in mind. They've been around since the Roman times, the Dutch, the French, the British, and the U.S. They were able to be sold to individuals in the early 1900s. And they've come a long way since then, okay? There's some benefits here. They can guarantee, annuities are the only vehicle out there that can guarantee an income you cannot outlive. That's huge. Void probate. Whoever's your beneficiary will get the money. No ifs, ands, or buts. Because if you don't have a trust or will or an annuity or life policy, the state in which you live has a will or trust for you. It's called probate, which is hell, okay? And no one wins on that, by the way. Tax deferred growth. Your IRA and 401k grew tax deferred, and the annuity will continue that. They can protect your principal. Fixed annuities and index annuities are not subject to any market losses. There's minimum guarantees on these products. Okay, with variable annuities, you can buy that. However, it's going to cost you. Variable products have risk, and there's fees. Plain and simple. Talk to your financial advisor about that. Liquidity. Annuities offer interest-only withdrawal, 10% free withdrawals. You can annuitize the payment for as long as you live, and if you die, the money goes to what? Your beneficiaries. Very liquid. Some of them even come with an income benefit rider as well. Asset protection. Depending on where you live again and which jurisdiction, your state will give you creditor protection on a certain dollar amount or monthly payment amount. It just depends on where you live. Some states, I believe, like Florida, I think Texas and Arizona are unlimited amount of money. So if you have a lot of money in annuities, Jesus can't even touch that money. It's pretty neat stuff. I hate to say that, but I think you get the idea. Annuities have other benefits as well. Income benefit riders, and I got to tell you, if you have an IRA and you're tired of fees and ups and downs, and you want to put it someplace where it'll still be an IRA, you can take money off it for the rest of your life, have liquidity, have death benefit features, and save yourself money on fees. Annuities are for you guys. So any questions about annuities, IRAs, 401ks, or life insurance, give me a call. I appreciate the opportunity to help you out with your situation, and have a wonderful day. Thank you.